We're live.
Okay, let's call, Michelle says she's trying to get online, so. Yeah. All right, let's go ahead and call this meeting to order the end of February 15th, 2024 Finance and Audit Committee meeting. Teresa, will you take a call, roll call?
Trustee Gordon Cook.
Here.
Trustee Robert Johnson.
Here.
Trustee Yummy Pandolfi.
Here.
Trustee Michelle Wyckoff. Trustee Ronald Thies.
Yes.
We have a quorum.
Michelle will be online since she gets her connection. Thanks. Okay, you have the agenda, pretty standard. Any changes, comments? Otherwise, I'd like a motion and a second to approve it.
So. Second.
And Teresa, you just take the vote.
Trustee Gordon Cook.
Yes.
Trustee Robert Johnson.
Aye.
Trustee Yummy Pandolfi.
Yes.
Trustee Ronald Thies.
Yes.
Trustee Michelle Wyckoff. Motion carries.
Okay, minutes, we're out. Didn't see any changes.
I move the minutes of the Thursday, January 11, 2024 meeting be approved. Second.
It's been motioned and seconded. Teresa?
Trustee Gordon Cook.
Yes.
Trustee Robert Johnson.
Aye.
Trustee Yummy Pandolfi.
Yes.
Trustee Ronald Thies.
Yes.
Motion carries.
And this is Michelle. I'm on now. I was having problems unmuting.
Okay, Michelle, would you like to vote on that motion?
Aye.
Thank you. Motion carries.
Okay. Financials. Jeremy.
Yes, morning. We'll start with the first page, which is our balance sheet. Just comparing cash and investments to the prior period, January 31st, 2023. Cash and investments totaled 76.3 million. As you can see in the current year, January 31st, 2024, cash and investments are 64.96 million. So that's about an $11.3 million drop in cash year over year. Beyond that, comparing the prior periods activity level.
We ask questions along the way.
Sure.
I assume that is mostly related to construction.
Yes, I think so.
You're looking at, you're giving us the aggregate totals, correct?
Correct. Comparing the prior year activity, the revenues over expenditures a year ago at this time were just over 24.5 million. And this year they're just over 18. So there's about a 6 million drop in the variance between revenues to expenditures from the last year to this year. I don't believe I have any other things of note for the balance sheet, but I'd be happy to answer any questions.
I guess I've asked this question in the past relative to the cash we have sitting in the bank, and I know that gets what is closer to a money market rate, but I also know that the yield curve, there's probably 50 to 60 basis points spread on whatever our rate is on the bank account. So I don't know how aggressively we're running the cash. But 21 million sitting in the operating account versus having, if you look at 90-day T-bills, you probably pick up at least 50 to 60 basis points. So just throw that on the table.
Yeah, and I'll have to talk to Quan. I mean, some of this may just be timing. As of 12/31, the cash was 21, perhaps,
January.
or January 31st.
Yeah.
If we had received that money on the 31st, then there really
Right.
be
No, I
no good way to move it. But
So
yes, I agree. We need to leave some liquidity. I don't believe we need this much either.
You gonna go over the P and L separately? Or did you,
What's that?
did you go over the P and L or are we going to go through that? The operating.
Oh, no, I'm just doing the balance sheet
Okay,
first.
sorry.
If there's no more questions, we'll go on to the general fund.
Let me, I guess, in total, what are the revenues for each of the three counties? You have those, well, let's say through, yeah, January 31st.
Well, I think he's gonna get to that.
Okay.
I think that's our next page.
It is.
Yeah. Mine too.
So I have other questions as well, but
Good.
let's have him go through that and then we'll come back to questions.
Okay, so just comparing all taxes, the current year compared to the prior year, we're up about 7%, about $3.49 million. Total revenue is up about 8%, so just a little bit higher at $3.74 million compared to the prior year. On the expenditure side, payroll and benefits are up about 9%, about 1.75 million over the prior year. Library materials are down about 17%, which is 1.17 million compared to the prior year. Programs are up about 12%, 46,000 compared to the prior year. Library operations are up about 3%, 156,000 compared to the prior year. And total expenditures are up about 2% or 778,000 for the prior year. So the difference between revenue to expenditures in the general fund is up about 16% or $2.96 million. However, with the $9 million transfer, then our change to fund balance comparing this year to last year is down about $6 million. So other than that, I would say that what I can see, it appears that the library is performing in the budget that we had projected earlier.
Okay, I have questions, Bob, go ahead.
Yeah, I assume my question is in reference to the amount of property tax, personal property and real property taxes generated in each of the three counties. I assume that's the amount on the far right side.
That's the budget for the year.
Oh, this budget, so
The middle would be the year to date.
Year to date.
And then in the far left.
Yes,
is
got it.
current.
There it is. Got it. Thank you.
So I have a question on revenues. Have you projected where we're going to be? And I was looking at where we stood last year against what we finally ended up with, ignoring the debt transfer of $6.5 million. But we were 55.5 last year, which was based on the June 30, 89, a little under 90% of what we finally ended up with. And we're at 58, almost 59 million to date this fiscal year, which would, if I extrapolate the same ratio, puts us about 65.8 million against a 64.5 budget. So have you done any work to project the rest of the year? And I know we have this year the appeals in Jackson County. Do we know how much impact that's, do we have any idea of?
I have not heard what the final outcome of the appeal process has been. In terms of a projection, we currently think that we're on track to be within 1% of our budget. It's been about the standard. The real difficult thing in projection is really how much of the prior year people are going to pay, to keep their property off the tax cycle, to be quite honest. So that's pacing a little higher than it was last year. But I think we're still going to be right with that same range. So we haven't made any massive change to the revenue projection.
Great. Second question I have is on I see we moved interest cost up into library operations in the budget. That is shown below the line as a finance cost. I was curious why we moved that up.
I'm not sure I'm following you, but
You look on the bottom of the, go to the next page, Cody or Brian.
Page up,
Oops.
page down.
Page down, sorry. Oh, let's go back.
But
There we go.
interest was in the budget.
I want the second page of that statement. There. So on the interest was below the line. I guess I look at that as a finance transaction as opposed to a operating cost. But it's now presented in the operating expenses, so I just, we budgeted it down below. I think it's probably, I think I prefer it stay below. So we look at pure operations cost against, in terms of what the library is doing.
I believe the GASB would consider interest expense an operating cost of the general fund. It would perhaps be a non-operating cost of an enterprise fund, but in the general fund, it's an operating expense.
And I guess my comment in regard to that is that these are internal financials, and what we do on the GASB side shows up in the annual report, and what we do internally is kind of is just understand how things operate. So I don't know that we have to follow the hard and fast of the GASB on these financials. So the second question I had is the budget has 350,000 allocation of future maintenance. Is that still your intention to move that before the end of the year?
We need to move that.
Well, we budgeted
Additionally,
9,350,000 for allocation from the general fund over to the capital fund. We transferred 9 million, but there's 350 remaining in the budget line. That 350 is for future maintenance.
The 9 million is necessary to continue the capital project. The 350 is set aside as an earmark that should the budget go the way that the library intends it to go at the end of the fiscal year, that 350 would be moved over for future capital maintenance needs. In the event that, say, revenue were not to meet our expectations or an expenditure were to occur that wasn't anticipated, then 350 acts as a buffer for the operating fund.
Okay. So we'll revisit this in May or June then.
Yes.
Okay. All right. Michelle or Yami, any questions?
Nope, I'm good.
Okay.
No, thank you.
Moving on to the next page, this is the capital project fund. Of course, the largest activity in the capital project fund is the capital plan. It's on a different schedule, but you'll see that we've spent almost 9.86 million of the 16.2 budgeted for the capital plan. In addition to that, we have just under 100,000 in the agreement with our owner's representative. And we've spent on permitting fees, I believe, $2,300 at the end of January on the demolition of Park Jones, which I believe Aaron is down now.
Yes.
It's down.
It's down.
Is it done?
Not, they're filling in.
But it's,
Yeah.
Beyond that, total revenues and transfers into this fund are 9.85 million. Expenditures are 9.958 million. So we spent $107,000 more we have in revenues and transfers. Barring any other questions, those are my final comments on the financial report. Submitted for your consideration.
okay. I have on the capital funds. So we just understand where we are. So the balance sheet, or in the capital fund, we have 5.575 million of available fund balance. Again, we have almost 17 million of what I'll call interfund payables due to the bond structure we have. Yeah. So if we have 4.946 plus remaining expenditures, if I fast forward everything, does that mean I have about 600,000 of available capital?
Yes.
What's my number?
That's what we think it is.
So if nothing else changes, we're looking at just a cash transaction between here and what I'll call the finish line.
Correct.
Okay.
Given the timeline of the two buildings, though, I believe there will be some bleed over in the next year.
Yeah, well,
Final
yeah,
payments.
I'm
Yeah.
ignoring fiscal year. I'm just saying to when we get to the finish line. So there's 600,000 at this point. So if I did the 350, then we would end up with $1 million, what I'll call $1 million in the capital fund at the end of the year.
Correct.
Or assume that, and again, forget the,
When the project is over,
Yeah.
we'll have around $1 million,
Right.
presuming no more money is added.
okay. Does that make sense to you too? Shall we, Emmy? Any questions
Yes.
on that? Okay.
Oh.
The second question I have, because I want to go back to stuff that came up last month, is on the health insurance fund. Because we found out, or we learned that cash is commingled. And there's no interest income or investment income credit going into the health fund, and I know this is fund accounting, but.
Yeah.
Uh,
Yeah, I talked to Quan, and evidently the library's position in prior years has been that the operating fund is where the interest is kept. The variation or splitting of that operating between the various operating funds was seen as administratively burdensome. But when I spoke with him a couple of weeks ago, we discussed that looking at net assets at the end of the fiscal year and allocating interest earned from the bank account is an appropriate measure. And so we intend to do that moving forward.
Okay, all right. So then my second question on cash investments, since we commingle cash, help me understand why I have two different trust accounts for investments, because
Well,
as this is fund accounting, but
right, it's fairly standard to separate because we have to explain to the IRS how the interest proceeds of the certificates of participation were spent. So it's fairly standard in government to separate anything that's a capital bond proceed from all other cash. So what you'll see as those certificates of participation are turned back in, that account will just essentially dwindle away to nothing once all of those investments have matured, paid the general fund back, and paid all of its obligations. Anything remaining then would be there for the debt service, if there is anything remaining.
okay, so you're saying the initial 80 million had to go into this separate account. Okay, so then why? Okay, so in comparison to the 9 million, that was a bookkeeping entry. We didn't actually move $9 million over and move it back.
That's correct.
Okay,
From a cash perspective.
right. And so if I again fast forward to the end and say, okay, I'm done with the COPs, then if I'm understanding correctly, I can just close that account and I can end up with a pooled investment account. Correct?
Yes, when all the COPs mature, what isn't spent on the capital project is then converted to debt service. But that account will be closed because that then becomes
Okay.
operations.
But theoretically, that will be zero.
Theoretically, yeah.
Okay.
Given the amount of cash contributions from the library, I would
Right.
expect it to.
Well, we're far over that number, so. Okay. Then the only other question I had is on the health insurance fund. This is showing the fiscal year budget. Where do you report the actual, because that plan was on a calendar year basis. Can we get a report of the calendar year actual in terms of the costs?
I'm not sure the calendar year is simply for purposes of
Well, go back, the health fund is a calendar year, or the health contract, Blue Cross Blue Shield contract is a calendar basis contract.
Right.
And we split the two contracts and do the budget. So my question is, if the original, when they did the original pricing for the 2023 calendar policy year, is there a comparison of the initial pricing and what we actually ended up with? We should be able, I mean, that's something I think that Lockton should do or.
Yeah, Lockton does do it.
Yeah, so, but I'd like to see that.
We're reporting on the fiscal year.
Don't understand that, but I think part of what the purpose of having Lockton here last month was to get an understanding of how the health fund works. And I'd like to see a summation of the 2023 year. We can do that next meeting.
I'm not sure the IBNR is finished for the 2023 year yet, but I'll check with Lockton and see what
Well, there
they got
always,
the lag, so.
yeah, there will always be that. Yeah.
Well, right, but there's a certain amount of lag that gets accrued back, so.
Right,
That's why.
Right, but as
I
of,
think it's
as
90
of,
days, but I'm not sure.
but as of but they'll have some estimate of that, and we'll at least look at the pricing, what the original pricing, the initial pricing was on the policy year versus what actual was.
Yeah, I'll check with
Okay.
Teresa, or sorry, Jennifer, and see
Okay.
when we get that from Lockton.
And that, Ron, Michelle, Yummy, Bob.
Nope.
Comments, questions? Aaron? Sorry. Any comments? No? Okay.
I guess just one, and like I said, we have this budget process, which I think is great to have. I just didn't know if we were gonna make any comments about it on.
We're gonna get there. I'm just trying to wrap up monthly financials.
Yeah, that's correct, exactly that.
Any surprises on either of those surprises on the capital side? Do we need to know about?
Sorry, surprises?
Any spending surprises?
We're still on track.
Contingency usage, nothing?
Nope.
Okay. All right, good. All right, if that's, unless there's other questions or comments, was there a personnel schedule that was posted? Because I didn't see
It's
it.
posted on board docs, but it got missed off the PowerPoint. So apologize for
It
that.
wasn't there when I looked yesterday. Is it there now?
It was there when I looked this morning.
It's there.
Pull
Pull
it up.
Cody, can you pull up the personnel schedule, please, on 5.4? You need me to do that? Or Brian?
Yeah, I can.
I don't believe there's anything on the schedule that's changed significantly. Other than the format.
We'll check the box and just say we look at it. It's on finance, Teresa, or on board? Something.
Could be under 5.4.
Oh, there it is. Oh, next schedule. So this is a different schedule.
Yeah, I believe Jennifer, but is Jennifer here today?
which is fine, I just.
Yeah, it's my understanding there's
She redid.
been some internal reorganizations, and so the report needed to change to coincide with those internal changes, but the dollars didn't change, so we're still on target where we've been.
She did mention that she revamped the personnel data report.
Well, I haven't seen this, and so I don't know, do you want to make a comment on this, or do you want to defer to?
I'll defer to Jennifer. I mean, I don't know how much I can, I mean, it's a reformatting of the information, broken out by areas.
So can you help, I just, for the purpose of understanding, can you describe I get the last two columns, public service, public programs, materials, what's the distinction in terms of what's going in there?
Public programs would include traditional programs that you're aware of, but also all mission enhancements are lumped under that category. Public services is everything but mission enhancements. I would be more comfortable with Jennifer kind of explaining. I do know the reason for the reformatting, that we're doing a lot of internal reorganizations, reorganization, and the way it was laid out previously is reflective of a structure that doesn't exist today. So we grouped it this way.
All right, that's fine. Well,
I'm here. Do we want to?
well, go ahead, Jennifer.
Sorry, it had the wrong mic turned on my computer. We have done some reorganization of some departments here at HQ, and the previous report had a lot of breakdown detail by department. And so in looking at, that there's likely going to be, well, there's always going to be some sort of changes to structure happening. That just is by nature of an organization of our size, that grouping the departments and in some cases the functions of the people in the departments by these segments of our business seemed like the best way to break out the information, and also to make still make the report have good information for the committee and the board for how we're spending staffing dollars. So public service is the branch staff, and also the folks here at HQ in the customer experience department that manage those folks. Public programs would be your rater services and youth services, the director of reader engagement here at HQ, as well as the mission enhancement programs. Materials would be technical services, which is processing, collection, development, and delivery services. So how we handle materials, get them and move them around. Technology would be library systems, IT, digital innovation, and operations would be all of the support departments like admin, HR, marketing, finance, etc.
Well, I like this format. So,
And hopefully it will get us the information that we need, and we can tweak it if we need to. But this seems like a way to do it so that the report will match up what we're doing going forward.
okay. And just I know this, is this easier to prepare?
Yes.
Okay. And I assume these are coded in your, do we use ADP? Who do we use?
Paycor.
Paycor. So
use
Paycor, you drop this out of, so this comes out of Paycor.
Yeah, it comes out of Paycor, but then is in order to make sense for us, I have a spreadsheet with a pivot table that.
All right.
numbers
No,
we want, so.
I think this is fine. I like this. So.
Okay. Good deal.
Thank you, Jennifer.
Uh-huh.
All right, good. All right. Yummy or Michelle, any questions on that?
No, I'm good.
Okay. And from Michelle. All right, let's go to the budget, pattern, schedule. All right, who's gonna take you?
Yeah, I could just start off. So before you is a proposed calendar for our budget process for this coming fiscal year. For the most part, it conforms to last year's schedule with one exception. We've grouped our first special budget work session with the regularly scheduled board meeting on March 19th. So what we're proposing is that 1 hour prior to our regularly scheduled board meeting, staff will present kind of a overview of our proposed budget for the coming year. And it's very high level because we're still waiting on some numbers to come in for a maintenance study. And we also can engage in a conversation about the non-binding levy. And then we would transition into the actual board meeting where a vote would be needed on the non-binding levy. Our reason for grouping them together is we feel that a conversation about the levy should be coupled with the needs of the library at the same time. So that's what we're proposing. And then everything else pretty much follows the same calendar as last year. We reconvene around May 14th to review the revised budget. Again, I'm just reiterating the point is there's a starting number and then there's where we'll land in May. And from there, we go to the submitting the budget to the full board, public hearing, final review by finance, and then the critical votes at the end of June and late September. So 2 special work sessions. Happy to add more if people want to talk about the budget, but I think it should be enough. And then the customary review by the committees, their individual budgets, and kind of the final look at it by finance. I think we'd be in a good place. So this is the proposed calendar. So you have 2 arrows.
Well, those okay. I do. So you said a 1 hour session. My question is that this seems rather short.
Could be longer.
Well, I know, but if you start at 4 o'clock and then there's this mad dash to 5, I guess I'd want ample time for just discussion.
Absolutely. We did not put durations here. I just picked 1 hour, just off the top of my head, but if an hour and a half or 2 is needed, I'm happy to do it. It's all about everyone's availability. If they can make it, then I say we do it. And I will provide coffee and snacks. But I will remind everyone, if anyone's getting nervous, our regularly scheduled board meetings used to be 2-3 hours. And what we're proposing here is 2 sessions that probably would land in that neighborhood. So.
Yeah, no, I'm just. I don't know what else is on the March agenda. So I know the amount of time we took last year was close to, that was kind of the first time out of the box.
Yeah, I do want to say, not getting into a great deal of detail. At the first session, we're going to look kind of broad categories, link them to the priorities of the library and the goals that the board voted on. You can kind of see where we are. And then from there, I think then we'll be getting into the weeds, really showing the board where the investments have been made.
So this is going to be more descriptive than quantitative.
Yeah, I do, again, because there's still a lot of information that we have to gather, we should have by early April, am I right?
For the mate building?
Yeah. Okay. So,
So I mean, whether we start at 4 o'clock, I didn't want to get caught where the standard board meeting had to start at 5 o'clock. If that isn't a hard time, or I'm thinking move this one to 3:30, but if you're telling me that we can start at 4 and start the other one at 5:30,
it might be better to start the special session a little bit earlier, instead of keeping people here later. So if the board agrees,
Yeah.
starting at 3:30, that might be.
That's it, 3:30.
That would do 3:30, that's kind of my.
I would check the board policy right quick as well, but I think we could, there may be a note in there about the start time. Not sure, but I would check that. You can go ahead, but.
So, well, that's the only question I have is, can we?
Without,
I think 90 minutes will mean we're not feeling rushed and, if we end up getting done in an hour, we get done in it. So it's fine.
It gives you a short break between meetings if you finish with
Yeah.
it, so, which
Yeah.
you might want.
Yes.
Yeah, so.
Okay. So 3:30 it is.
So the first, when is the rough draft? I know technically it's not done until, the May finance review, but when do you have 95% of the numbers in?
That would be around May 14th. Well, I mean, let me see, we're submitting, May 10th, or I mean, April 10th. I would say, right, because we're submitting to our proposed budgets to the committees at the beginning
Okay.
of April.
So somewhere in April, you have some idea where.
Yes.
Okay. And then you also said you're also looking at, I guess, starting to look at the levy then, correct?
We are?
I'm not
No,
sure.
it's Mike.
Oh, yeah, sorry.
I can look at it today if you want.
Well, again,
I get it.
for the record, state the record.
Yes.
The historical practice was to take whatever the levy produced. And in 22, we went to a calculated levy based on what the library estimated its needs were. So I'm assuming that's going to be the approach we'll follow this year, because our 2 years expires this coming year. So the options in September are to, again, set a levy based on what you estimate the library's needs to be, or revert back to what the calculated, calculated Hancock adjusted levy is at the maximum rate, which is nowhere near the voter approved rate, because there have been numerous Hancock adjustments and growth in the counties along the way. So I know there's some I'm aware that there is some confusion about what the voter approved levy was at 40 cents, which was never exercised, even out of the box, because it got Hancock adjusted before it ever got used. Okay. So anyway.
So yes, that we intend to demonstrate, a need.
Okay.
And I have no idea what that number would be at this moment, but definitely share it with everybody.
Okay, all right.
Put the budget together.
Well, and I just wanted that's a fairly intense exercise because of the estimates that go into the valuation and all the other components of what the valuation base is in each of the counties, plus all the prior year collections and delinquents and other things. So it's a lot of moving parts.
in a non-reassessment year, though, the assessment part will be a little bit easier. It's really just projecting what we think
Right.
construction will be.
Yeah, and you know, having done that 2 years, I actually think it works better because you're not having to guess both sides.
Mhm.
So, you know, you let the reassessment take place, you know what, you know where you're going to be the following, you know where you're going to be for 2 years. And I still think there's a lot of work to be done at the 3-county level because I'm aware that some, at least in Platte County, some commercial properties had 500% increases that were appealed. I mean, numerous commercial properties had incredible increases. So.
Just so I'm clear, by statute, we're required to vote on the non-binding levy and then approve it then at the end.
Correct.
Okay.
Correct. And what came up last year, again, just for the record, historically, the non-binding levy up until last year was put out at the voter approved rate of 40 cents. Okay. So when, well, last year it was changed to the adjusted.
Yeah, the year before it was 35.
Okay. And, but again, I'm gonna go back to, I thought it was always set at it was approved at the maximum rate, which always raised the question.
Yeah,
I
with
think-
the
I thought it
exception
was
of a couple of
46.
years ago, yeah.
Yeah, I said a couple of years ago, it got changed, right?
Correct.
So.
Correct.
Okay.
I know maintenance is going to be, I hope, more seriously discussed. I can even mention this now because it has no relations, but I would like to see the boundaries between Kansas City and Mid-Continent in sort of the western part of Jackson County. We have a map that shows.
Yes, I mean,
That's not very.
Yeah, but yeah, okay. I mean real blocks, especially like,
Names of streets and things like.
yeah,
that.
like, for example, you're starting at the county, at the state line. And moving east, where is that? Do any of us know what our northern boundary is?
It's like the river.
The
It's
river.
not the river.
It isn't the river?
No, it's
Okay,
Kansas
well,
City.
so do we have a map, Teresa?
yeah, I don't have one readily available yet.
Yeah, I'd like
We
to
certainly
see
have
that,
things
because
like-
obviously, once you get out of the Kansas City School
Yes.
District, then you have
Yeah.
our
I can
responsibility.
check with,
Yeah, it doesn't have to be today.
Yeah.
I actually want to see where, and that's why I'm starting at the,
Actually, I'd be
State
nice to
line.
have just
Okay.
for the board, so.
yeah.
Because I don't know that I've ever seen one, and
Yeah, we can provide that.
I think Clay County, I know when I did when I did the file a couple of years ago, like there's 4 or 5% of Clay County that's not included. Is that correct?
City of North Kansas City
Yeah,
is
City
not.
of
North Kansas City,
Yeah,
okay.
that's right.
City of North Kansas City.
Okay, all right.
Eastern Jackson County, right?
So maybe we get a map of
That.
we get a map of both counties, so we just have that.
You do that.
We can all get dialed in.
Yeah.
Okay. That would be great.
All right.
Anything else? Yeah, I mean, Michelle, any question on Michelle? I know you're having trouble unmuting.
No, I don't have any questions. I'm
Okay.
good.
Is 3:30 work for both of you? On the 19th?
I'm not sure.
March, let me look.
Yeah.